Good afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. Well, these are the top headlines that we're tracking at this hour. It's a strong start to the July series. The Nifty trades very close to the 10,700 mark. All the sectoral indices, barring the pharma index, are trading in the green. ICICI Bank gains after GC Chaturvedi is chosen to be the next chairman of the private lender. IDBI Bank gains the most in 3 months ahead of the IRDAI meet to decide on its proposed deal with LIC. And HEG and Graphite India locked in upper circuit after Macquarie sees more than 50% upside for both these stocks.
Okay, let's see what the markets is doing at this point of time. Both the Nifty and the Sensex are doing extremely well. We have had an extremely poor series as far as the month of June was concerned. But Nifty trading at the highest point of the day. It's up almost 101 points. Let's take a look at the Bank Nifty, and that too is trading up by almost more than 100 points. Slightly underperforming the Nifty, but nevertheless it's up in trade. The Sensex is also up almost 1% in trade. So that's what's happening as far as the markets are concerned. If we can pull up the broader indices, the mid cap 100, that's up almost 1.27%, so that's outperforming the Nifty. And the small cap is doing the best. It's up almost 1.55%. So clear traction that is seen on these stocks. Let's see what is the big contribution. Let's first see the heat map. Okay, so oil companies have actually done well. GAIL is up almost 5%. Hindalco has bounced back. Metal and oil are the two sectors I'm clearly watching out for. Titan is at the day's high post RJ selling stake that came in yesterday. It started in the red, but nevertheless is doing well. Metals on that end. Tata Steel is contributing. L&T is contributing. Reliance is contributing. All these counters contributing. What is not contributing? News in Dr. Reddy's in terms of the Suboxone delay, that's down in trade. M&M has had a fantastic week, but nevertheless a little bit of profit booking seen. Oil marketing companies continue to bleed. They are not doing well, and HDFC Bank is not contributing. If you can see what the contribution to the Nifty is, the Nifty is up almost 100 points currently. What is contributing? These were the counters which were not contributing. Reliance has not participated, it started participating. L&T had not contributed, it started participating. ITC did not participate, it started contributing, and HDFC is up in trade. What is not doing well? HDFC Bank is down in trade. It was one of the gainers in trade yesterday. IndusInd Bank, M&M, and Dr. Reddy's are the other contributors. As far as some of the other stocks that are concerned and that are moving in trade, first of all, let's take a look at the advanced decline. The advanced decline has actually now moved much in favor of the advanced. Almost a 1:3 type of ratio is something that you're seeing on the advanced decline ratio. Certain stocks that we want to watch out for, key trends of the day, basically some of the stocks that are buzzing in trade and the trend that is moving. Titan started weak, is trading at the day's high. Jet Airways also started it. In fact, at a fresh 52-week low today, has rebounded significantly from those levels. Some of the counters that are trading at 52-week lows, you have counters like Reddington. TD Power has managed to rebound right now, and Capital First is at a 52-week low. And one counter which continues to impress is Godrej Consumer, trading again at a fresh record high. So Godrej Consumer probably will be in focus. But Navneet, anything you're spotting?
Yes, Darshan, it's been a great start to this July series. In fact, we bounced nearly 100 points. So Nifty trading very, very close to the mark of 10,700. Remember, a lot of the analysts were talking about a support of 10,550, and clearly we bounced back from those levels. If you look at the futures, the Nifty level, actually, it's trading above now, not near. It's above the 50-day moving average of 10,689. So that's one good news. The futures, however, they continue to trade at a discount of 7 to 5 points. But the futures definitely have seen open interest build-up of nearly 9%. That's telling you there are fresh long positions being taken on Nifty futures. If you look at the Bank Nifty futures, open interest out there has also gone up, which is suggesting fresh long positions. But let me tell you, both Nifty, Bank Nifty futures continue to trade at a discount, which may not be a very great sign. But to support that negative aspect, you've got the India VIX on day one, which is corrected quite sharply. So that's positive news. India Volatility Index has seen a sharp correction of almost 7%. That's at day's low now, below just around the mark of 13. In terms of option strike, what sort of action we are witnessing in today's trading session, clearly it's all about the 10,600 put strike. Remember, that's sitting with maximum open interest right now across the call and the put side, and as of now almost 14 lakh shares have been traded there. The premium is around 105. That's telling you that the support for this market is clearly coming at about 10,500. So the put writers of 10,600 strike are protected till the time index trades around that level. Just a couple of stock futures, because there's no major action seen on any of the call strikes. So I'll just start off with IDBI Bank. There are fresh long positions which have come in. The counter is trading with gains of 8%. The volumes in the cash segment has been on the higher side, and we know why this move has come about ahead of the IRDAI meeting. We'll watch out for the outcome of that meeting. In terms of the open interest, that's gone up, and that's the reason why we've seen fresh longs coming about. The top loser in terms of F&O securities today is Jain Irrigation. That's touched its fresh 52-week low. It's down almost 2% in trade. Fresh short positions on day one of the July series have been witnessed for Jain Irrigation. And lastly, I want to highlight Tech Mahindra. This is the stock which has been weak since yesterday. Yesterday it was the top loser. It fell in the second half of the session, and today once again it's down 1% after yesterday's correction of nearly 7%. Tech Mahindra, let's just pull up the plate of Tech Mahindra. That's Jain Irrigation on the screen. But definitely the open interest is on the higher side, and fresh shorts continue to build up for this one. 11% higher for July futures in terms of open interest increase. Darshan.
Okay. Lots of news that are making rounds today. First of all, it's Friday, and before we wrap up trade this week, our team of researchers and reporters are here with all the top newsmakers of the day. Vishwanath, Yatin and Yash join us. So Vishwanath, first, starting with you. Clearly, ICICI Bank has finally found a new chairman. What's the way ahead? Any kind of commentary that he's given?
So Darshan, earlier this day, JC Chaturvedi spoke to Bloomberg Quint, and at that he pointed out that he hadn't been informed by the bank's board about his appointment as the chairman of the bank. But the bank put out a statement to the stock exchanges confirming so. From here on, as the chairman of the bank, he will have to oversee this investigation that is being conducted by Justice Sri Krishna against the MD and CEO of the bank, Chanda Kochar. As the chairman of the board, he will be responsible for the board's earlier statement as well. The board had earlier stated that they have full trust with Chanda Kochar, and they back her, and that they felt that they did not find any impropriety in the way she dealt with in the Videocon case. But of course, after another anonymous whistleblower letter, the bank had to initiate an investigation against the MD and CEO. So the outcome of that investigation and what is stated in the final report that Justice Sri Krishna submits will have a bearing on what GC Chaturvedi is expected to do at the bank. Apart from this, there's also some other concerns with the way the bank deals with its NPAs and the way it books income. So all of these questions need to be answered, and as the new chairman, Mr. Chaturvedi will be expected to answer those questions.
Okay, Vishy, thanks a lot for bringing all those details with regard to ICICI Bank. But moving on to the auto pack, and we're going to start the new month. And once again, then the monthly numbers will be in focus, and this time around for the month of June. So Yatin Mota is here to tell us the key expectations from the various players. Yatin, over to you.
Well, if you look at the entire auto sector this time, we have a quite strong month of June that is expected, and the trend on the positive side will continue. If you look at the overall matrix, we have M&M tractors and as well as the M&M automotive segment looking quite strong. 26% growth is what we're looking at for M&M automotive segment. Of course, the base for M&M tractors is quite large, and probably because of that we are expecting only a 9% growth there. Hero MotoCorp and Bajaj will do well. Bajaj, especially to do with the fact that the last year's base was low, the export markets were sluggish. This time, both the domestic markets on the back of new launches and the exports market after the recovery in oil prices should be doing quite well. As far as Royal Enfield and TVS Motors, other two-wheeler players are concerned, again good growth seen there. Royal Enfield, of course, the momentum will continue here. Ashok Leyland, of course, on a higher base, will continue to grow. 14% is the kind of growth expectation that we have for Ashok Leyland. And as far as Tata Motors is concerned, do watch out for this space because we are expecting a strong 44% kind of a growth there, largely to do with the fact that not only the medium and heavy commercial vehicle segment has done well, but the passenger vehicle segment and the new launches, and the production ramp up there is clearly aiding the growth here. And Maruti Suzuki, 23% growth seen there on a lower base last year. Number should be upwards of 130,000 units. But remember the fact that 1 month maintenance shutdown has impacted production for Maruti Suzuki, and to that extent we could see lower sales on a month-on-month basis, but clearly the momentum on a year-on-year basis should continue for even a company like Maruti on a higher pace.
Okay, and finally, two stocks that are in focus are HEG and Graphite. They're locked on upper circuit today after Macquarie projected a potential upside of more than 50% for both these counters. Yash, what is the finding of the Macquarie note?
Yeah, thanks for that, Darshan. So they have come out on a very detailed report on the graphite electrode sector. Now they believe that the demand uplift in the electrode segment, that is more to do with a structural demand and not just cyclical in nature. They expect that with stable steel production and limited capacity expansion, the demand for graphite electrodes should sustain at the current levels. And needle coke, which is a key raw material price for graphite for the electrode makers, there the prices are expected to remain firm, and correspondingly the graphite electrode prices, they are expected to be strong over the next 3 years on the back of limited capacity expansion and technology and capital related constraints. On the utilization side, well, they expect that the Indian players, who account for about 22% of the global market share, their utilization levels would remain higher given the increased demand and limited supply. As far as recommendations and target price are concerned, they expect more than 50% upside in both of these players. So for Graphite India, they expect a 63% upside, and they've set a target price of about 1,260. They expect their volumes to grow at a compounded annual growth rate of 4% over FY19 to FY21. Similarly, for HEG, they see an upside of 58% and expect their volumes to grow at a compounded annual growth rate of 5% over FY19 to FY21. Back to you.
Okay. Thanks so much, Yash, for that. But it's time to get into management on the show right now. Let's speak to the management of Arshiya. The company is, let's get the management of Arshiya. The company is planning to a demerger of its railway business and consolidate its warehousing business. Ajay Mittal, Group Chairman and Managing Director of the company, is talking to us currently on these plans. Thank you so much, Ajay, for taking the time out and speaking to us. Firstly, let's talk about this demerger plan that you have. You plan to separate the railway business and consolidate the warehousing business. What's the strategy? How are you planning to do it? What's the view ahead for both these businesses?
Well, the strategy is pretty simple. We have been pioneering the concept of the free trade warehousing zone in India, though we've gone through our pains with regards to, policy issues that we had in the past. Now is the time to really consolidate this free trade warehousing business and put it in a separate entity, which is the listed entity. And we already have a partnership with Ascendis now, whereby they have already purchased 800,000 square feet of warehousing space at a whopping price of about 6,500 rupees per square foot at Panvel. And we have a forward agreement for them to purchase another 2.8 million square feet of warehousing space. So we want to keep that business in a separate entity along with the 3PL company, which is an asset-light business completely. So basically the first entity is going to be a pure developer of warehouse along with the 3PL, which is asset light, and the second entity, which is going to be capex heavy, where there's a lot of capex required, is the rail business and the ICD business, the rail terminal business, which is where we are going to do a mirror listing through a process of the court, where we will do a demerger and actually have a mirror listing where all the capex heavy business will go into a separate entity. No shareholder actually has a loss in any manner whatsoever, but actually a gain, because the strategy for building further the capex heavy business is to really look at mergers in the space, because there would be consolidation in the rail and the PCTO, the private container train operator business, as we go along. And we'd like to be the ones who want to take the first step forward to get all this consolidation done as far as possible and move from an 18 train to about a 50 train, and from a 1 terminal to about a 5 terminal business as soon as possible.
Ajay, when you say that it's a mirror listing that you're planning to do, am I guessing it right that it will be a 1:1 split that will happen? So whatever the shareholding pattern in your railway business will be, it will be the same in the warehousing business?
Well, I am not going to be able to comment at this point of time on this, because the valuations are yet to come out of both the businesses. Based on the valuation, the court filings would be done on the splitting of business or the demerger business. So I'm unable to comment, but whatever the split would be, it actually doesn't affect the shareholder in whatsoever way. In the sense whatever the split would be, even if it's 2:1 or 1:1, it would not make any difference.
Any timeline, Ajay, that you have by when will the demerger be consummated?
So we plan to actually file the scheme sometime in the first week of July in the court, which will be the NCLT court, and we hope that normal time taken is about 6 to 8 months. But given that the NCLT courts are now busy with a lot of the IBC issues, it may take as long as about a year or so.
Okay. Ajay, since yours is a business which was, positively impacted, I would call it, from implementation of unified tax regime in the form of GST. It's almost 1 year now, and we've been discussing how GST has benefited the economy or how it has not benefited yet. Could you tell us how is the last 1 year since the time GST has been implemented? How has it benefited your company?
Well, I think GST has been the biggest boon for a company like us. Honestly speaking, the kind of assets that we built and the infrastructure that we built was almost 10 years back, much ahead of its time. And we were expecting GST to come into this, be implemented in this country long time back, but thanks to this government, it ultimately got implemented almost actually a year back from today. The GST has actually allowed all the big companies which are our target clients, whether they're Indian companies or foreign companies, to relook and rejig their entire supply chain. And whilst doing that, they realized that hubbing and spoke is the real way to move ahead. So free trade warehousing zone, our domestic warehousing business has been affected very, very positively with the GST regime. What was really happening in the past was that people were having warehouses in virtually in every state to avoid double taxation and all those kind of other issues that they had. Now with GST, I think the biggest, I would say we are the luckiest people to be at the right place at the right time now.
Ajay, I was just looking at the debt picture. Your debt was close to almost 2,200 crores approximately. What's the plan to reduce this further? And once this demerger happens, will majority of the debt still be on the railway side and the other business will be very, very asset light?
So we have a three-pronged strategy to reduce the debt. One is that with the monetization of the warehouses with the forward agreement that we have with Ascendis is one way to reduce debt. Further, monetization of our warehouses also in Khurja Free Trade Warehousing Zone and the domestic warehouses where we don't have a forward agreement with Ascendis, but we are working with a few real estate investment trust on monetizing those assets. That is one strategy. The second strategy is that we would be looking at some QIP or preferential allotment in the very near future to reduce debt further. And thirdly, we feel that with debt coming down, with the EBITDA rising, with all the businesses which are now starting to have become operational and are churning up good EBITDA margins, is obviously going to go towards reducing our debt further. So I feel that in the next 2 or 3 years, we will be predominantly a debt-free company. And we still have to sort out some of the banks in the subsidiary level companies, which we are in discussions with them, and we feel very confident of sorting them out.
Okay, so that's the guidance you're giving, that the company will be debt-free by at least in the next 3 years. So as of FY18, Ajay, 2180 was your debt. Just if you could give us a percentage in FY19, how much are you looking to cut down your debt by?
Well, I don't have an exact number to this, but we feel that we should be able to cut down our debt by about 550 crores or so.
Fair enough. 550 crores is something that you're working with. Also, if you could tell us about the capex plan that you've lined up for FY19 and FY20.
The capex plan for 19 and 20 predominantly is towards building more warehouses in the Panvel Free Trade Warehousing Zone and the Khurja Free Trade Warehousing Zone, for which we've already tied up with Ascendis and with Edelweiss for giving us some priority funding, and there is a forward agreement to sell these warehouses. So it's really a time, it's just arranging that gap funding is what we are doing in terms of capex. And with regards to growing the rail business, it's all about, you know, as I said, consolidation in the industry. So we're looking at more of, you know, swapping, merger swaps and so on and so forth for growing that business. So it's really not getting any cash out of the system.
Ajay, what are you doing are you looking at monetizing any of the warehousing places that you have? You have this deal with Ascendis, but apart from it, any monetization that you're looking at?
Well, monetizing, we are also looking at monetizing our land in Nagpur. We have about a parcel of about 110 acres or so at Butibori, next to Butibori station at Nagpur, where we had planned once upon a time a free trade warehousing zone. But as of now, we don't see that fitting into our plan, because as we have grown as an economy also, and with GST now in place, we see that the western zone that we have in Panvel can actually service the entire west zone as well as the south zone. And the northern one, which is in Khurja, UP, can actually service the entire east and north. So we don't really see a need for having anything in Nagpur at this point of time. So that is one land parcel that we will look at monetizing very soon.
Okay, and are you already in talks to monetize with somebody, or you still have to initiate that?
We're in talks with a few prospective buyers, but it's not, you know, time's not been very conducive for people to really look out and buy land at this point of time. So we are also not in a very big hurry to do so, but the plans are to monetize that within this financial year.
How much are you expecting to sell the land that you have, this 110 acres that you have? What's your expectation?
Well, my expectation is much higher than what the market is trying to give me at this point of time. But
no, so just tell us
I
your
think somewhere close to about 75-80 crores is what. Mine is 75. Well, my expectation about 75 to 80 crores. We've got offers at about 60-65. So there is a gap, and we will see that. We'll wait. If it can be bridged, we'll be happy.
Okay, we hope that you get the price that you're looking for, Ajay. Just a word on the numbers now. If I look at your top line, there's been a degrowth in the last 2 financial years. Now, considering things are looking good, according to what you're suggesting, demerger will take place in the next 9 months. GST is benefiting your company. Tell us what sort of growth that one can expect on the top line going forward.
So actually there's no degrowth. If you look at the consolidated numbers, they've gone up. There have been subsidiaries formed in terms of structuring the entire deal with Ascendis. Hence a subsidiary of Arshiya Limited was formed where the maximum amount of revenues are going in. Now that is the reason why you see the standalone numbers to be a little lower than what they were earlier. But as we see from here, I'm not supposed to give a forward-looking statement, but I see a very, very healthy growth as we go along for the next few years. The growth predominantly for us is kind of stagnated till we build more capacity in Panvel, which is the construction is starting from next month, which is virtually 2 or 3 days later. The construction work is going to start there. The growth is going to come predominantly from our Khurja facility, which is probably the only integrated logistics facility in the country which has a free trade zone, which has the largest private rail siding to even, for container cargo as well as Indian Railway wagons. It has an ICD, it has domestic warehousing. So, and it's on the confluence of the 2 dedicated freight corridors, which hopefully should also get operational by 2019 or 20. So, and it is virtually on the Yamuna Expressway and off the very, very close to the new Jewar airport, which has been announced by the government lately for the second airport in Delhi. So from a logistics standpoint of view, location is very important for any logistics infrastructure. And I think we are sitting on a very good location, and we see growth coming from there, phenomenal growth coming from there.
Okay, Ajay, we'll leave it at that note. Appreciate you joining us today and taking us through what's happening with the company and what to expect going forward, and wishing you all the best. Well, that was the management of Arshiya Limited. The stock's actually doing pretty well in today's trading session. The guidance which the management has given on the debt picture is that they're looking to cut down their debt by almost 500 crore in FY19, and they also look to be debt-free in the next 3 financial years. Okay, moving on from Arshiya, let's talk about the IT pack. Tech Mahindra is readying services for its telecom clients across the world as they gear up for 5G rollout by the end of the year, says MD and CEO CP Gurnani in a conversation with Bloomberg Quint earlier today. He further said weakening of the rupee is a positive over the short term as 55% of the company's business comes from the US market. Let's listen into a slice of that conversation.
The net of after my local spending, which is different parts of the world. We do business in 90 countries. Most of the contracts are in local currency. And once you adjust for local spending, the net that is left, and since my business with US is about 55%, I can only say is that yes, from a P&L perspective, in a short run, the rupee weakening is good for the export industry.
Right, Mr. Gurnani, then I'm going to shift focus to your telecommunications space and that vertical specifically. A lot has been said about capital expenditure in 5G across the globe, and perhaps Tech Mahindra can gain substantially from the capital expenditure coming through. That said, there are now some concerns with respect to delay in capex because of challenges in spectrum allocation in Europe and US to a certain extent. So I just want to understand how you're reading these cues, and if there is a possibility that there could be a delay, what implications will it have on Tech Mahindra?
So if you look at the industry, one is the convergence of communication, media, and entertainment. With this, I can only say there are three factors which will impact or give us a chance to accelerate our business in the communication, media, entertainment business. Number one is the spate of mergers that are happening. Number two is the virtualization of networks, the software-defined networks. And number three is 5G. Now, I don't expect all three to fire at the same time. It's the way things are on 5G. I just came back from spending 2 weeks in US. Almost every client I talked to, and please go through the public announcement, Sprint, Michel Combs, who's their CEO, has committed that he will invest very heavily in 5G starting the end of this year. Verizon, AT&T, T-Mobile, all have publicly stated that they have started the trials and they'll accelerate. Now the question is in Europe. In Europe, I think it is one of those situations where there may be a little bit of a gap, and similarly Asia has always seen how the other leaders are doing, except for countries like Singapore and Australia. So I personally believe that our projection of Q4 of this year is when 5G expenditures will start. Stays, I haven't seen anything new to believe it is getting delayed. And we all know that 4G rollout took almost 3.5 years. So 5G rollout has to take 4 years simply by extrapolation.
So I understand that Tech Mahindra will have a very important role to play in this case for network services as well as operating support systems. That said, sir, what are the competitive threat from regional players around the world, and how are you assessing the competitive aspect of things?
I think again you're stealing my thunder, because in September we are participating in a Mobile World Congress in California, and that is when we are launching our 5G portfolio. The fact is that 5G is not a traditional network rollout. 5G is a configurable network rollout. Every player will try and position themselves in a very different way So I strongly believe orchestration players like Tech Mahindra will try and define the market a little differently than a traditional players like Nokia or an Ericsson or Huawei. The good news is that there is room for everybody, and hopefully the new partnerships will emerge. I can only request you guys to hold on till September, because that's when we launch our 5G stack at Mobile World Congress.
Okay, back to the markets. If we can pull up the intraday chart of the Nifty Bank. The Nifty Bank saw a big cut that came, it went into the red, and now again back up 60 points. So it's been extremely volatile for the Nifty Bank. Pull up HDFC Bank, and HDFC Bank is one of the sole reason why there is immense pressure on the Nifty Bank, and HDFC Bank trading at the lowest point of the day. So a couple of other stocks I want to highlight. Cipla has moved to the highest point of the day. Bajaj Auto has moved to the highest point of the day currently. Container Corp has moved to the highest point of the day, and Tata Steel has moved to the highest point of the day. So significant amount of traction that's happening among some of the Nifty stocks. Tata Steel is doing extremely well for itself. And look at all the steel stocks in trade today. Pull up Tata Steel, pull up JSPL. SAIL is up 2%, JSPL is up almost 5% the last time, it's up 6.5%, and pull up JSW Steel. Hasn't reacted much, but nevertheless that is doing well. Bajaj Auto is now up almost 4% in trade. So significant amount of traction that's coming in on the two-wheeler side. Let's pull up Hero, Eicher and TVS. Let's see whether the traction is only in Bajaj or it is in the other counters. So TVS not reacting. What is happening with Hero has not reacted. So pretty much I think ahead of the auto sales number, there will be movement that will come in. I think the market anticipates that Bajaj will come out with a strong set of numbers. It's up almost 4% in trade. But time to get in the technical analyst now. Manav Chopra, Head of Equity Research at Indiabulls Ventures, joins us on the show. Good afternoon, Manav. Thanks for joining us on the show today. Firstly, what are you? It's a new series. The July month will start from Monday. What are you recommending clients? What's your reading of the Nifty and the Bank Nifty charts?
See, the markets have been quite range bound, in spite of the breakdown that we observed yesterday, there is a complete, I would say at lower levels, there has been a very good buying, and which has led to rejection at lower levels. So how we interpret is that as long as Nifty now sees a close above 10,670 levels, you could see this short covering to, take the markets higher. The broader or the near-term range for the Nifty would be 10,600 on the lower side and 10,750 resistance on the upside. I sense that, in spite of that breakdown that happened yesterday and close above, most importantly, the weekly closing is something that we'll be eyeing in. The last week low for the Nifty was close to 10,700. If we inch higher and maybe close above 10,700, I think next week could be interesting, and you could see this follow-on move on the upside. For Bank Nifty, I sense this range to continue. Like mentioned last week, 26,200 is the lower support range, and on the upside 26,700 is the broader range. But on the immediate basis, the resistance would be at 26,500. So in case if we see a break above 26,500 is only when one can expect some sort of a positive bias. I think going forward, the private banks could take an important initiative, and from the PSU space, I think SBI would be one stock that one can eye into. So in case if SBI starts forming a formation and sees a move above 264, I think Bank Nifty could sense some sort of a positive trigger on the upside.
Okay, that's the view on Bank Nifty, which has been underperforming the Nifty and the other broader markets in today's session. But let's also bring in Sarvendra, Srivastava, independent market expert who joins us on the show. Now, hi Sarvendra, good afternoon, and thanks a lot for joining us today. Well, the view hasn't changed for the last few weeks or months, I would call it. You still have a positional sell call on Nifty.
Yeah, hi, very good afternoon. No, you got it right. Absolutely. I think we kind of pride in the fact that we have always been macro technical guys, and we stick to what we stick to our guns. From the time we called a bear market in November, December 17, and which we reiterated in Jan of this year as well, I think the bear market is definitely there. The only thing is that only 10, 12 stocks in the Nifty have not fallen, and that is why Nifty is not showing you the true picture. But you go and look at the internals of the market, it's already a quasi-bear market. Stocks are down 50, 60, 70% retracement levels from the respective highs. So, and that's almost a 50% universe, which is more than 40% retracement or more in this fall. So in that sense, I think for me, the tricky issue is that will Nifty correct or not? But my answer is that such kind of underperformance, when it's already come in the mid-cap, small-cap space, Nifty then does not have the ammunition to fathom a fresh breakout. So the chances of a fresh breakout, if at all, 100, 200 points possible, but I think that the probability is very, very low. So I would still stick, and I would say that I still believe that the Nifty is falling much lower. This is a even year, and even years you fall minimum 25, 30% from the high. So in that sense, we have not gone nowhere as far as the Nifty is concerned. So immediate targets, if I have to put positional, I would maintain 10,400 as my target, even though I believe that 9,700 and sub 9,700 levels will come this year. But for the time being, sticking to a 15-20 day time frame, 10,400 is what I would recommend as a target. That is what I have recommended as a call earlier as well. So that call is open. That call is live. We gave that call at 10,770. But still, I think 10,700 also, I would take that trade. The stop loss remains the same, 10,931.60 on a closing basis. So that needs to be kept in mind. A positional sell on Nifty, and these are spot levels.
Okay, Manav, stock specific, which are the stocks that you're recommending for today?
See, at the current levels, both the recommendations are on the buy side. My first call is buy on Colgate-Palmolive. The stock overall has been in a very good uptrend, and a few months back we did see the stock rally, see a very good rally from its lows of 1,000 towards the levels of 1,300, and now the stock has corrected and seen a good corrective decline, and is also forming a support near the levels of 1150. I sense from the current levels there is a good risk reward ratio, and going forward, where the markets could be range bound to slightly, you will see some sort of selling pressure. I think the defensive stocks like Colpal could see some sort of momentum, and also the stock, since it has declined near its key support areas, I think the margin of safety is playing quite well. Keep a stop loss at 1150 on the lower side. We expect an upside target of 1240. My other call would be a buy on Escorts. So basically, the stock has already seen a series of decline from its recent peak, and near its important support levels, it has seen a good bounce from its deep oversold levels, and also a reversal formation on the daily charts with confirmation on volume. I sense going forward, there'll be some short covering that could take place into the stock, and with that case in mind, 845 could be the stop on the lower side for an upside target of 880.
Okay, Escorts doing quite well in today's session. Sarvendra, coming to you, your trading strategy in terms of individual stocks?
See, we will be ready to put our money where our mouth is, and what we are saying here is that the theme to play out for the next month or 2 months will be outperformance will get punished. So those are my words. Outperformance, wherever it has been till now, will get punished. So you will see all the leading names. So I think this decline will be led by the HDFC Twins and Reliance. So if the Nifty has to fall, there's no way that anything else will drive down Nifty those many points. So these three names have to fall and will fall. That's been the call last week as well. So last week also we shorted Reliance. We are shorting it again at a lower level. So my sense here is that the leading names will fall, all the names which have not fallen till now. So all three names today also are from the outperformance list, which have not fallen. The first one being HDFC Bank, sell on HDFC Bank for a target of 2051 with a stop loss at 2187.60 on an hourly closing basis. A sell on Asian Paints. This is again a stock which has not fallen. A sell on Asian Paints. Crude will start hurting this stock now. Look to sell for a target of 1200. Anybody wanting to have a slightly higher time frame, say around a month, 2 months, then this stock could actually fall till 1120, 1130 level as well. But for the time being, next 10 days, 1200 is the target. Stop loss for Asian Paints kept at 1306.60. Again on an hourly closing basis. And last one is a reiterate sell on Reliance. So last week we shorted it above 1000 levels, but today we are wanting to sell it again at these levels in this pullback. So a sell on Reliance again, right now around 976, 77, I think, for a target of 900. So we are kind of downgrading the targets. Earlier 930, now 920, 930. Now we are saying that it will go to 900. Look to short sell now again. Spot levels 1015.60. So the stop loss from the earlier 1061 has been trailed to 1,001.560. So anybody holding that trade can still continue to hold Reliance from the last week as well. Look for targets in the region of 900 or 920 odd levels. So all three names, all from the outperformance basket.
Okay, let's get in a fundamental voice on the show. Gurmeet Chadha, co-founder and CEO at Complete Circle Solution Consultants, joins us on the show. Good afternoon, Gurmeet. This is Darshan here. Joining me on the show is Navneet. What do you make of the market currently? The Nifty has given a breakup opening today. It's up almost 100 points. What's the sense that you're getting? Will this hold on, or do you sense that, investors need to be cautious now and take these rallies to exit their positions?
Hi Darshan. The broader Nifty doesn't really reflect the pain in the portfolio. So there is pain across asset classes. While the Nifty is only fallen, 4-5% from the peak, there is obviously bigger pain at a small and mid-cap level. We were the other day discussing that 1 out of every 3 stocks is approximately at a 52-week low. The bonds have taken an MTM hit. So I think the markets will be in a range for some time. I think there are global factors, there are domestic factors, and I reiterate that this is a good time for picking up stocks, being disciplined, and revisiting the old lessons. Stay where the earnings are, stay where there is visibility in terms of volume growth, visibility in terms of GST making an impact in formalization of economy. And you have to look at the emerging market MSCI index. It's fallen almost 10%, and China has fallen despite Class A shares being added. So it's a broader EM pain, and exaggerated in India more by some domestic factors. So range bound for now, but good time for stock picking from a 2-month kind of a perspective.
A 2-month perspective, stock picking, you spoke about, stay with companies which you're seeing earnings visibility. Let's get some names out. What are you referring to? Which are these stocks that, someone if is looking at a 2-month perspective, which are these stocks?
So one, I think, is the auto pack. I think, if you see the auto numbers, whether those are two-wheelers are growing in, early double-digit, passenger cars, I think this year would clock 18 to 20%. CVs are growing at a very healthy rate. So one name which comes to the mind is Maruti, which is a leader in the passenger car space, almost 50% market share. If you see Maruti, their product mix, was 81% of the revenues in 2010 used to come from hatchbacks. Now that's come down to almost 62-63%. There's a waiting period for most of the models, which includes Baleno, Brezza, Desire. They have about 1,800 dealers, which are sum total of Hyundai, Tata, Toyota, Mahindra put together. We are seeing some reduction in royalty payment as well. They are co-developing some of the models, especially Brezza. So I think it's a good play. There'll be some margin levers also, as I said, they are working. Their phase 1 plant has already started producing 20,000 units. So Maruti is one of the names. The other thing which comes to mind is the affordable housing space, the HFCs.
Okay, what in the affordable housing space, Gurmeet, that you like?
So, Gruh Finance, despite being at a multiple it is, is a very, very good buy. If you see, the disbursal of home loans, 40% by number and 20% by value are happening under the government scheme, which is the Pradhan Mantri Awas Yojana. And the effective rate, home loan rate there is at about, 5.5%, if you incorporate the subsidy. Also, if you look at Gruh Finance, their operating cost to assets, which is an important ratio, is just below 1%. The asset quality is very, very healthy. Last quarter also, there was almost a 20% growth in disbursals. So very, very steady. And overall in India, if you see, the mortgage to GDP, our ratio is around 10%, the penetration. Any developed market is around 50%. So there is a long, long way to go there, both in terms of the expansion of the pie.
Okay, so those are two picks coming in from Gurmeet. One is on Maruti and the other is on Gruh Finance. Just want to highlight some of the pockets which are doing well. I think the hotel stocks have gone up in trade. So pull up Royal Orchid, that's seen gains, and also something like that's up 8.5%. EIH EIH Associated, and also Oriental Hotel. The entire basket, Taj, GVK, most of them are seeing substantial gains, and they all are sitting at days high level. That's EIH, EIH Associated also sitting, not a very liquid counter, but still sitting with gains of nearly 5 to 6%. Oriental is up 18%, just a few points away from being locked in upper circuit of almost 20%. Gurmeet, any thoughts on the hotel pack? We randomly see these stocks going up, then the rally fizzles out, and the news is that the occupancy rates for the hotel segment has been going up, and we've received some positive commentary, especially from the management of Royal Orchid. But anything in this space that you guys like?
Yeah, we track a couple of them. Lemon Tree hotels look good. It's in the mid segment. The occupancy levels we've been tracking, as we discussed that from after 2008-9, the first time the occupancy levels are touching 70%. Also, there is a broader uptake, and the average tariffs have also gone up. So I think both put together should give. But hotels, as I said, should be more. It is very, very seasonal. So one has to be very careful in terms of how you build your position in and do that. Typically post, so this quarter would be good because there's a peak summer season, a lot of travels. The next quarter is a little lean. So it's a very cyclical business, and one has to build positions accordingly.
Okay, one stock which has managed to buck the trend is Titan. It's at the day's high. It's up almost more than 4% currently. It's trending up. Let's pull up Titan, 4.5% up move. Gurmeet, Titan, news aside of what happened with Rakesh Jhunjhunwala, Titan has corrected almost anywhere between 10 to 15% from the recent highs. Will Titan make a good investment bet for someone?
Yes, I think it's one of the fundamental stocks to own for the long run. And mind you, he's only sold 1.4%. Mr. Rakesh Jhunjhunwala. So it's not that he's exited Titan. And it's one of the jewelry is another player where there's a big GST impact. There is a lot of formalization happening, in this space, and I think Titan is the best to capture that.
Okay, and the valuations do not deter the fact that one should still hold on to a stock like Titan, Gurmeet?
Yeah, Naveen, honestly, what has happened in this market is that, there is this value trap. So you can't buy stocks which are even fallen 50%, especially like a Vakaranji or a Videocon or some of the others. And there are stocks which continue to command a premium. So this market is priced to perfection. And as long as you deliver a solid earnings growth and there is good corporate governance, this is becoming very, very important. When it comes to valuing whether those are HDFC twins or whether those are some of the tire names or the Bajaj pack. So what we are seeing is that there's a premium to performance, there's a premium to corporate governance, and I think this will continue. There's a lot of it is house under renovation. Till the time we really clear a lot of these issues, this premium to some of the good names will continue.
Okay, Cipla has moved to the highest point of the day. It's up almost 2.5%. It's trading much higher. It's at the day's high. Gurmeet, any view on the pharma pack? Do you like Cipla or any of the other pharma stocks?
Yeah, I like the CRAMS space, Darshan. India, Divi's Labs is one which comes to mind. CRAMS is basically contract research and contract manufacturing. We are seeing some very smart tie-ups happening in the value chain with some of the leading multinationals of some of the Indian companies. So that looks pretty good. I think diagnostics also as a vertical is looking very, very good. This market is hugely unorganized. If you go to tier 2, tier 3 towns, you do not have any formal players. The market is probably, there are various estimates, but some say it's more than 75% unorganized. So I think diagnostics, especially Dr. Lal and Thyrocare look good place. So CRAMS and diagnostics to me would be good. I would stay away from generics for some more time because that would be very, very news driven. Some plant getting clearance from FDA and there will be spots. So broader pharma, I would stay away, but maybe look at CRAMS and diagnostics as a sub-vertical.
Okay, some of the other metal counters are doing well. Tata Steel is doing well. Vedanta has moved to the highest point of the day. Sarvendra, any view on these metal stocks, so Vedanta or Tata Steel? If someone is looking to take a position, should it be on the long side?
See, I think the metal space can be a trading long, if at all. Beyond that, I think still the sector now stays below its medium-term and long-term averages. So Tata Steel has broken both its medium-term as well as long-term supports as well as key averages as well. So till you trade below that, so which is roughly placed at around 600. So I would say as long as you stay below the psychological 600 mark for Tata Steel, this can be a trading play. So yes, a 15 to 20 point trading play is possible from here. So anybody wanting to take that trade, definitely the trade is there. So you could look at something like 580 to 585 on Tata Steel on the spot. So if you're wanting to do that, then you keep a 7 to 8 point stop loss and you can look at a long trade. So that's the only stock that probably I would say that I want to play for a trading bounce. Vedanta, I think, is weaker of the space and weaker of the lot. So I would try and avoid because this could give you ugly surprises and you could end up losing some money here because for me, decisively, the metal space, the longer term trend is down. So purely a trading play, that to Tata Steel.
Okay, so one can look to expect a trading bounce is what Sarvendra is suggesting. Even Jindal Steel and Power, remember that's the top gainer on the Nifty Metals Index, which has seen gains of nearly 3% in today's session. So JSPL also sitting with gains of nearly 6%. The other stocks which have gone up is GAIL. I think that's your top gainer on Nifty, and also Petronet LNG. Both these stocks have seen good gains. GAIL slightly off today's high, sitting with gains of almost 5%. Petronet LNG, that's also in the futures and options market. That's also seen gains of nearly 5 to 5.5%. Manav, on the charts, if one were to take a bet on any of these stocks, how is it looking?
See, at the current levels, I think if you look at the chart of GAIL, the stock overall has been in a range bound since past 3 to 4 weeks, and so there is no clear trade at the current levels. What we can conclude is, the support of 310 looks good, and in case if it comes at lower levels, one can look to initiate. But looking at the chart for Petronet, definitely it indicates a good breakout which has taken place on the daily perspective, and also on the weekly chart there is a very good reversal. I sense that there is a very short-term bottom which is forming at the current levels, and 212 could be a very good stop loss to go forward. So one can definitely look to maintain a buy into this, and possibly expect the levels of 230 in next couple of days.
Okay, one other sector which is doing well is FMCG. Both ITC and HUL have moved to the highest point of the day. Gurmeet, before we let you go, a view on this FMCG sector. Most of the counters are trading near new highs. Godrej Consumer is at a new high, even counters like Bata. So anything that has to do with consumer is doing well. Anything that you like from this pack, it could be an ITC, it could be an HUL, it could be any stock. If someone wants to play the consumption theme, what according to you should that person buy?
See, I think there are multiples. I think it's a very, very broad theme, as you rightly pointed out, across. I think we are seeing volume growth in FMCG, whether it is Nestle, Unilever. One thing I like is Britannia. I think, again, despite valuations, we are seeing there's a profitable product mix now, while the rest of the industry derives 70% of the revenue from the lower end, which is your glucose biscuit and others. Britannia derives it from cookies, so 70% of the revenue for Britannia comes from high-end products, so which gives it a better operating margin. They have been coming up using the health plank very well under the NutriChoice and other brands. So that's one play we can look at. The other we can look at is Bajaj Electricals, which again to me is seeing a huge surge. They have done some amazing work on distribution. We are seeing a big uptick in rural demand. Met Department has also said that the monsoons are 15 days above schedule, which is very, very important. So maybe these two stocks you can play on the consumption side.
Okay, well, the consumption theme so far has been performing really well. In fact, we've also seen stock like Emami, that's also surged in today's session, and it's gone up on quite a good volume compared to yesterday's session. So 5.5% gains for Emami on the screen. Gurmeet, we'll leave it at that note. Thanks a lot for joining us today and taking us through your views on the markets. Have a good weekend.
Thank you.
Well, that was Gurmeet giving us top picks on Maruti and Gruh Finance. And talking about the markets, we're still stable, 10,695 for Nifty. Bank Nifty is also holding about, though it is off the day's high at 26,380 for Bank Nifty. There was a blip which came in just half an hour back for that one. Okay, it's time for us to slip into a short break. But before that, let's hear out Seshagiri Rao of JSW Steel, who believes that Indian steel imports have reached worrying levels. Speaking to Menika Doshi earlier today, Rao also stressed the need to safeguard domestic players. Listen in.
If any unfair competition that comes in, I think Government of India has to take the steps to stop the injury to the domestic industry.
Okay.
Just to give you some statistics, 2008 to 2014, if you see the imports into India, that every year normalized imports is around 6.5 to 7.5 million ton. That is the range in which imports have been happening starting from 2008 to 2014. So 2015 and 2016 are only the years there were aberrations of unfair trade. Where 2015 imports went up to 11 million ton and in 2016 it went up to 13 million ton. So when it happened, not only Indian steel industry suffered, entire global industry have suffered, which in fact showed that there was a dumping. So Government of India have taken several trade remedial actions. In the meantime, the global steel prices also went up. Now, if you look at 2017 and 2018 numbers of steel imports into India, 2018 particularly, again imports have gone up. It is 8.4 million ton. So when we compare with the normalized imports of around 6.5 to 7.5 million ton, 2008 to 2014, 2018 imports again surged to 8.4 million tons. So anything above the normalized range of 6 to 7 million ton, I think Indian industry has to worry about.
Okay.
And as I mentioned to you, in the current financial year, again we are seeing an increase of 15% over 8.4 annualized basis. So that is a matter of concern. We are also seeing out of the imports of 8.4 million ton which has happened in the last year, 51% of the imports are from FTA countries, Japan, Korea and other Asian countries, which is 0% duty. So these are the areas where I think steel industry in India should be watchful and should bring to the attention of the government. Whenever there is any line item in the import side, there is a surge which is causing injury to the domestic industry. Taking into account the kind of trade retaliatory measures that have been taken by various countries, there is a need for us also to see that this unfair trade will not hurt the Indian domestic industry.
No, I get that, sir, but you've also pointed out that demand has been better than anticipated. Is that demand not enough to be able to absorb these higher imports? For instance, what capacity utilization have you all been running at for the last couple of months?
If you see the total Indian steel demand side, we have 91 million ton of consumption last year. Out of that, we exported around 9 million and also imported 8.4 million ton. So imports and exports doesn't happen. We are really balanced as regards to Indian steel consumption and production is concerned. We have 130 million ton of installed capacity. Out of that, we produced crude steel of 102 million ton in the last year. If we take 85-90% capacity utilization, still there is 10 million ton scope for incremental production. If our demand is growing at a rate of 7 to 8%, that means every year we need another 7 to 8 million ton of steel to meet our domestic demand. That can come from the unused capacities today in India. And on average, if I look at Indian steel industry is operating 80%, of course JSW Steel is operating above 90%. Then in the next 2 years' time, there is an incremental capacity that are coming in from JSW Steel itself. We are bringing in close to 7 million ton of incremental capacity. We are 18 million ton today, so we will be 25 million ton by 31st March 2020. In addition to that, where we are declared as the successful bidder, our preferred bidder for Monnet Ispat, if we are able to get another million ton can come into the market. So 7 plus 1, 8 million ton from our fold can come in from 18 million ton. Similarly, the other competition, if you look at, there are incremental capacities that are coming in the next 2 years' time. So there is, at least in my view, including sales recently commissioned projects where they are talking about 21 million ton of installed capacity from their existing production of 14 million ton, another 6 to 7 million ton from the government sector. So all this together, I don't find any issues to meet the domestic demand growth that would come in the next 2 to 3 years' time. Only worry is imports.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth platform from India's largest stock exchange.
promise of GST was a bold one. Has it delivered? Join BQ as we take a deep dive into the year gone by, from our vantage point to yours.
Watch the fine print GST special all week only on Bloomberg Quint.
Welcome back. You're still watching Countdown with us on Bloomberg Quint. Just about 26.5 minutes to go for markets to close. And we're at day's high for Nifty, at least 10,711, 122 points higher. So clearly it's turning out to be a great day, or the end to the week after the June series ended on a weak note yesterday. But let's also do a check quickly on the European market indices, and let's see what's happening across the globe. In the good going, FTSE is up 0.7%. CAC has seen good gains of nearly 1.3%, and the German index DAX too also sitting with gains of nearly 1.5%. And I think the gains today that we're seeing is majorly being led by something like Reliance Industries, L&T. All these stocks were not doing too well in the last two sessions, but L&T too seems to have bounced back in today's trade. But on that note, let's bring in our next guest, Anand, Tandon, market expert, who joins us on the show now. Hi Anand, good afternoon, and thanks a lot for joining us today on Bloomberg Quint. Well, some respite for the markets. We've seen a bounce back after a week closing to the June series yesterday. What are you sensing? Because the broader markets, they've not recovered too much, so to say, the way we've seen recovery coming in the frontline indices. Do you see further pain in the broader market universe?
Well, if the liquidity continues to be remaining tight, and I think there is a good possibility that will be the case, I don't see that there will be a huge upside on the smaller companies. Clearly, the market is now getting more and more narrower in terms of the stocks that are holding it up. And it is best that one be very careful about the broader market, especially those which are not the institutional stocks.
Anand, historically, it's shown that June always comes as a time where there seems to be always a relief rally. If you take a look at the last 15 years, only thrice have there been negative returns in July. If in case that trend continues and we do have this month as a relief rally, would you recommend getting out of some positions for investors should get out of some of the positions that they have?
Well, really it depends on the scenario you're painting. Let us look at the most important factor which is spooking the market right now, which is the trade wars. In my view, most analysts have not factored in worsening of the trade wars, though the market seems to be moving ahead with the assumption that it will worsen. So if you assume that the trade wars will lead to a further worsening situation, then I think we haven't seen anything yet, because the front line, which is pretty much holding up, we are hardly down 5% from the top, is not going to be able to hold on where it is if the trade wars were to worsen, because the earnings haven't yet started to come in. If on the other hand you believe that the trade wars will kind of settle down and Mr. Trump will back off and things will be back to normal, then this is a great opportunity to be buying. So it's really the scenario you're looking at. My own case is that we are getting into a place where egos will override other economic and logical decisions. We are not necessarily living in the world of logic, and therefore you should be prepared for a further worsening from here.
If in case you wanted to deploy some money, which are the areas that you would look at as safe bets to ride this?
Well, there are no safe bets really, but there has to be a scenario you are painting. So if you assume again that India will generally not be in the trigger hair of the US administration, then I would look at export-oriented businesses and hope that those will continue to stay below the radar. And obviously the big opportunities there continue to be in pharma and IT, and also some of the other export things like chemicals and so on. Some of which, especially the chemical side, has fallen off a cliff. However, there is a good possibility that if you buy the argument that the trade wars will worsen, that India's exports will also come into as a target. And if that were to happen, then all bets are off. So in the absence of anything, I think it is safe to assume that you can continue to be benefited by the rupee weakening and look at the export basket as the single largest exposure at this stage.
Okay, BPCL is off the day's low. That's sitting with gains of almost 1% to 2%. Kolte Patil is up 18.5%. Couple of other stocks, Edelweiss, Indiabulls Real Estate, JSPL, all these stocks seems to have bounced back. Even Havells, let's just pull up Havells as well. That's sitting with gains of nearly 4% as we speak. Manav, on the charts, do you see any sort of fresh trade that can be taken on Havells?
See, at the current levels, when we see Havells, the stock has been consolidating in a range, but the most important support for the stock overall has been close to the levels of 530, which also coincides with its long-term averages. And most importantly, a reversal near the support zone further validates it. I sense with the risk-reward ratio, definitely one can take a trade at the current levels and take a near-term view. And one can also expect rallies towards the upper end of the channel, which is close to the levels of 570. So a stop close to 535 on the lower side for an upside target of 570 could be traded for at least for a week for the near-term perspective.
Manav, what about Indiabulls Real Estate? After many days of correcting, it's managed to inch up today higher. It's up almost 6%. What should one do in Indiabulls Real Estate?
Actually, I will not be able to comment on any of the our group of companies.
Okay,
so
Sarvendra,
I'll have to take the pass.
Okay, understood it. Sarvendra, can you share a comment on Indiabulls Real Estate?
Yeah, definitely. See, I think, again, in the short term, I think the stock looks oversold, so we are probably getting a small bounce here. But I think the overall trend here remains weak, and the stock continues to trade between all key short-term, long-term, as well as the medium-term support areas. So I would max see a bounce here till around 170. Unless until it clears, breaks and stays clear of 170 on the upside, I don't see any meaningful rally developing here. So purely a trading bounce if someone wants to play. Max, I think, is 168, 170 on the upside.
Anand, what about the PSU banking lot? What do you make of it? Most of them have corrected significantly, despite of all the efforts, that government makes to capitalize it or whatever they try to do. So somehow PSU banks, most of them are trading at record lows. What should one do when dealing with this sector?
Well, I think there is some case to be made for corporate-facing banks. PSU banks, which are otherwise, and that too among the large ones, the PSU banks, there may be a story to be said, especially, for example, State Bank of India. For the rest of them, I would stay, clear. These are zombie banks until and unless there is some dramatic change in the way they are managed, and that is unlikely so long as the government continues to be the largest shareholder. Nothing is going to change. They will continue to lose market share, and they will continue to extend loans which will go back.
Okay, PSU banking lot, some bit of respite, however, coming in today's trading session. And let's just address a couple of our viewer queries. I think Ravi Shankar on YouTube wanted a view on Ashok Leyland for the July series, and he wanted a view from Sarvendra. Sarvendra, if you could address this one, what sort of movement do you expect for Ashok Leyland for the July series?
See, I think by and large, we've maintained that outperformance will get punished, and this was a stock which was in that basket till last month and now starting to correct. So a couple of weeks back also we carried a short trade here. At that point in time, we had targets in the region around 130 because that was an area where we had its long-term averages, and the stock were bouncing from that number for the last 6-9 months. Now that area has been broken and decisively the long-term setups also inverting with the break of the long-term averages as well as some long-term key trend lines. My sense is that the stock should remain weak and would continue to slip. And the only thing is the extent probably is something that would be tricky right now because the stock is slightly oversold. So you might first get a small bounce maybe towards 130, 135 and then the stock corrects. So I would say that stock remains weak by July, and I would say that around a 4-5% negative return is possible for this month.
Okay, pull up Infosys trading at record highs currently, 1308 on the cash side. It's up 1.5%, and suddenly a big move has come in on Infosys. Anand, what about the IT space? Most of them have moved significantly. What would your preference be, the large cap or the mid cap?
As I said, I think if you're going to get a move, it will mostly be the frontline companies. And there is no particular advantage that one is now seeing that the smaller companies have. So the smaller companies could have been focused on perhaps what they call digital, but that is now beginning to scale up. So I don't think that there is any great advantage. It's a question of who can get the people required. So broadly, I think IT is doing okay, and I would think that you'd probably get better safety and equal performance by staying in the larger companies.
Okay, Hexaware has also turned green. Anand, we leave it at that note. Thanks a lot for joining us today and taking us through your views on the markets. Well, that's on the IT pack. Nifty is at 10,720, so good going there, and we're seeing some incremental gains coming about only for Nifty because Bank Nifty is still around those levels of 26,382. Let's move on. It's the last trading day of the second quarter in 2018, and the Indian markets have managed to reclaim ground after falling nearly 5% between the month of January to March. The same can't be said, however, about all the Nifty 500 constituents, though with an overwhelming majority still trading with a drop of more than 20% on year-to-date basis. Yash Upadhyay, who's put up some data together, joins us with the chart of the day. Yash, over to you.
Well, thanks for that, Navneet. So the Nifty 500 index, that has fallen by about 4% on a year-to-date basis, but there's more to it than what meets the eye. So as you can see on the chart, 46% of the NSE 500 members, they have given returns of more than 20% less, so negative 20%, while 33% of the NSE 500 members, they have fallen anywhere between 0 to minus 20%. So that is a huge 79% of the NSE 500 universe, which has only given negative returns. And as far as the top losers are concerned, they include the likes of Vakrangi, PC Jewelers, Quality, Hindustan Construction, among others. As far as the gainers are concerned, only 19% of the stocks, about 104 stocks, they have given positive return, with the top gainers including the likes of the IT pack, which includes NIIT Tech, Mindtree and others. As we enter into the second half of calendar year 2018, the key question here remains that is there more pain in the broader markets? That's the chart of the day.
Okay, thanks so much, Yash. And Navneet, what he said is absolutely right. You know, most of the counters in the mid cap and small cap space have gotten hammered. The Nifty has been managed only by, it's been controlled by 4 or 5 stocks, but some of them are down 50, 60, 70%. So that's the pain that's there in the market.
Yeah,
currently.
in fact, stocks like Reliance and especially the IT stock, Infi, TCS, who've been outperforming so far this year.
So it's basically Infi, TCS, you have your Bajaj Finservs, and basically, you know, it's the HDFC twins.
Yeah,
They have been controlling the market.
Weightage.
You add in a Kotak, you add in Infosys, TCS, but look at the pain in Tata Motors, look at the train in Spain in some of the pharma stocks, look at the pain in some of the metal stocks. So that's for all to say.
Well, it remains to be seen. Pharma, which outperformed in the June series, can the outperformance continue for the July series or not? But in terms of individual stock, I just want to pull up Capital First. That's touched its 52-week low in today's session. Manav, any thoughts here on Capital First? It's down 2% in a strong market like today. Would you take any bet on the downside here?
See, at the current levels, you know, the stock has been a complete underperformer and has been consecutively forming a series of lower tops and bottoms. I sense, you know, this stock is mainly a sell on rise kind of a strategy, because it's still trading below its even its short-term averages. So it doesn't make sense even, you know, trading it for a pullback. You could just see a short-term dead cat bounce, and eventually the stock again rallies on the lower side. On the upside, 535, 540 are the key levels on the upside, where in case if there's any pullback of another 4-5% is probably when you look to short. Overall, the trend still remains weak. I sense in the near-term perspective, the stock could also even test the levels of 490 in next few weeks.
Okay, a couple of stocks at record highs again. Britannia has moved to the highest point of the day. It's up 1.5%. It's trading at record highs. Bata has moved to record highs currently. A sharp surge that's come in Bata currently, and Infosys continues to do well. Among the smaller companies, there is Mindtree, which has managed to inch up significantly in trade. Questcorp, pull up Questcorp, which has managed to surge 6% in trade. So traction clearly seen. Let's take some of the counters. Manav, what about Bata? What do you see on the charts?
See, in fact, you know, the stock, after a good short-term consolidation near its highs, has managed to see a good breakout today on the upside. And most importantly, you know, when the markets were actually breaking on the lower side, the stock actually held its important key support levels. And today, the breakout has also accompanied by above 20-day average volume, so which definitely indicates that there is a very strong momentum into Bata, and also with the new high and above average volumes, you know, we expect this momentum to go higher on the upside. At the current levels, definitely one should maintain a buy into this, keep a stop of 854 on the downside, and can possibly expect the levels of 875 to 890.
Okay, that's Bata for you. That's almost a day's high with gains of 4%. Sajid Shah on YouTube wanted a view on LT Foods at current market price of 60. Sajid, I can only provide you a technical view, and I'll go across to Sarvendra for this one. Sarvendra, on the charts, any position that can be taken around the current levels on LT Foods?
I think I would say that best avoided right now with the kind of weakness that is there in the market. I think these are low traded, slightly illiquid names, so I would say best to avoid right now.
What about Britannia, Sarvendra?
Britannia, I would say that incrementally maybe 100-200 points on the upside possible, but Britannia is in that list of outperformance, and the way it is kind of pursed reminds me of what Pharma was doing. The entire FMCG pack reminds me of what Pharma was doing in 2015, and when we told people to start booking profits and getting out of that space, nobody listened, and see what happened to Pharma. I think the same will happen to FMCG. May take 3-6 months, but everything is going down minimum 30 to 40% from wherever it tops out. So Britannia, another 200 points possible, but after that, a sharp correction, because it's not taken a correction in the last 10 years. So somewhere it has to take that, and it will take that.
Okay, Dr. Reddy's has moved to the lowest point of the day. The delay in Suboxone launch that would happen is clearly playing out on the counter. Manav, any views on Dr. Reddy's? Is there more potential downside for the counter?
See the kind of a momentum that we've seen into the pharma index, particularly this month, and you know the rally specifically Dr. Reddy, which has witnessed. I think it is a time that one can start taking a bit of contra view for pharma space and also for Dr. Reddy. going forward. On the lower side, I think this opportunity should be taken to initiate fresh longs in case if you get stocks at good retracement levels and good margin of safety. On the lower side, 2200 is an important support to look out for. So in case if you get Dr. Reddy's close to that support area, I think it's time to one can look to initiate long positions. A stop for this can be placed at 2140 on the lower side, and possibly this can be traded with a view for at least for 1 month or at least for a quarter.
Okay, that's Dr. Reddy's for you at day's low, and just 10 minutes to go for markets to close. So let's get you some closing strategies from our experts. Sarvendra, I'll come to you first. Any closing strategy that you have for our viewers?
I would say that the way Tata Motors is closing today, I would want to play a small little bounce also somewhere. So I think Tata Motors definitely in the list, which has a stock being beaten out of shape. Very oversold. I would suggest that this on the next trading day it could bounce say around 8 to 10 rupees. So right now at around 269, I would say I would buy it for a target of around 278, 279 for Monday's trade, and I would keep a stop loss below 264.
Okay, some other counters which are buzzing in trade. Infosys again has inched up, trading at the highest point of the day, 1315. It's up 2%. So really strong buying that's happening on really high volumes on Infosys. The other counter which has managed to inch up currently is Pidilite. Pidilite is up 3%. Godrej Industries is up almost 5% in trade. Let's ask a guest on Pidilite and Godrej Industries. Manav, any view on Pidilite?
See, Pidilite, in fact, is showing definitely good risk-reward ratio at the current levels. The stock recently, after topping out close to the levels of 1200, declined towards the levels of 1020. So it has already declined by over 7 to 8%. And it has taken support near its short-term averages, and with the short-term consolidation on the daily charts and with the breakout today, I sense one can definitely take a short-term view for at least 3 to 4 trading sessions for a trade on the upside. At the current levels, the stock can be placed close to the levels of 1045 and can expect levels of 1110. Godrej Industries on the other side, has observed a very good sideways consolidation and a breakout today. Such breakouts usually leads to a good momentum play on the upside. But keeping a risk-reward ratio in play, I sense one should definitely wait for a pullback into this case for any fresh entry. 620 is an important support, is where one can look to initiate at the lower side, and eventually I sense the stock has a potential to even rally on the upside and test its all-time high. So keeping a good positional view on the upside, 680 could be the upside target that one can definitely look in for.
Manav, what about your closing strategy?
At the current levels for BTST trade, Tata Steel definitely is something that I would like to recommend. The stock has kind of formed a double bottom pattern on the daily charts, and the kind of a formation it has confirmed today, it definitely indicates some more further rallies on the upside. 560 would be the stop on the lower side for an upside target of 590.
Is there any view on these two counters? It's a query that's come in on YouTube. Bharat Electronics and NBCC, both of them are trading record lows. Is there more potential downside, or have they bottomed out?
That's for me?
Yes, that's for you, Sarvendra.
See, as a disclaimer, I would now say that BEL is something that we are recommending, and we have been recommending it now for the long term, because whatever base case scenario has been met here. So the stock has corrected more than 50%, almost 50% from the highs that it printed. So it has fulfilled our criteria where we were expecting 40-50% corrections. And this being a good stock, and overall the longer term setups or the longer term counts that we take, Elliott wave counts, I think those are still encouraging. The stock has decently retraced. Anybody wanting to look at BL has to look at with a 12-month plus kind of horizon, and in the meantime also be ready for some pain, because if the market corrects a little bit, then the stock could correct 10, 15, 20 points more. But now we are saying here is that eventually when the stock pulls back, the stock could actually end up at around 160, 170 into a pullback. And once the upsides are decisively in place with a break above 170, the stock would challenge its all-time highs at 200 plus. So the stock looks good. The horizon has to be minimum 12-month plus. You have to be ready for a pain till 80. And best case, I think this should be 160, 170. A minimum, bare minimum case. And best case, slightly longer term, it could actually be a 200 rupee plus stock. But it will test your patience and it will take time.
Closing strategies, Sarvendra, what are you spotting?
I had recommended one already, which is Tata Motors. I would if I have to put a sell trade as well, I would say in this bounce I would like to sell something like a Asian Paints, on which we already shared a call. But I think Asian Paints, I would still say I would want to sell it for Monday. And if someone is selling it only for a Monday STPT kind of trade, then 1240 is the target and not 1200. 1240 is the target, and in that case you are putting a stop loss at 1275.
1240 on the sell side is the target that Sarvendra is giving on Asian Paints till Monday. Can we pull up the chart of Gujarat Gas? I guess there's a sudden crash that has been seen for that stock. It's down nearly 6 to 7% in trade right now. 5%. It's recovered a bit. I think it was down some 6 to 7%. Any thoughts on this one, Manav? On the charts, Gujarat Gas are now at 722 after falling 5%.
Actually, the stock has been continuously witnessed a series of decline from its recent peak of 900, and most importantly, the stock also observed a breakdown from its monthly chart support levels of 750. So I sense this stock has entered into intermediate bear zone, and you could eventually witness a series of lower tops and bottoms going forward. So on a very short term perspective, there will be a series of resistance at 750 on the upside. So any pullback is an opportunity to exit into the stock, and eventually the stock could also see a series of decline on the lower side. So I think 650 could be also the target for a medium term perspective.
Okay, 650 on the downside could be the target. So the charts of Gujarat Gas, remember, are looking weak, and the stock just fell in the last 10 to 15 minutes of trade. Sarvendra, on day one of the new series, we're finding support from something like L&T, which had fallen 11 to 12% in the June series. Has it bottomed out? Can one look to take any position on this one, or there can be further pain? It's just a dead cat bounce.
See, I think for Larsen, I think the setups are very, very fresh. So just 4 days back, with some decent volumes, it broke below the long-term 200-day averages. And today, over the last 2 days, it's wanting to pull back and test that number. For the kind of lengthy long-range bar that we have put today, I am not excited with the volumes. So if it were, we are assuming here that the 200-day was a broken, the break was a whipsaw. So we are classifying, if the break was a whipsaw, then this pullback has to be sharper and with good volumes. So that it is not qualifying till now. So I would say that yes, this can just be a bounce, but Larsen is not done and over with, and there could definitely be more downsides left. The only caveat here remains that now, if at all there has to be any semblance of bullishness creeping back, the stock has to regain 1320, 1330 levels. And once it does that, then yes, then probably we can say that the break of the long-term averages was a false break, and the lows have been printed around 1200. So even if you buy at 1330, with a stop below 1200 and could keep a target of 1600, I think the risk rewards will still be there. But right now, very, very fresh setups, neither a buy convincing, neither a sell. I think it is a wait and watch, and probably a trade next week.
Okay, that's the technical view on L&T, but just a minute and a half to go for markets to close. Let's head across to Darshan Mehta to find out how exactly today's closing is panning out. And Darshan, what a great start to the July series, I would call it. We're closing above the 10,700 mark.
Yes, we are, and we are pretty much closing near the highest point of the day. The Nifty is up almost 120 points. The Sensex is up almost 400 points, but look what's not doing well. It's the Nifty Bank. It's up only 23 points. It was up almost 150 points at one point of time, has managed to cool off, given the fact that the public sector banks have not been performing, and so has HDFC Bank, has given up most of the gains. What's doing well is the mid-cap. The mid-cap is up almost 1.9%. Relief rally currently coming in as far as the small cap is concerned. The small cap is up almost 3%, and the BSE mid-cap is up almost 1.8%. So clear amount of strong traction that's been seen. Let's pull up and go to some of the stocks that are in focus. Let's take a look at which are the stocks. So GAIL is up almost 6% in trade currently. It's among the top Nifty gainers. Titan continues to do extremely well in trade. Titan has moved up post a weak opening. The metal pack is doing well. Hindalco, Tata Steel, both of them closing at the day's high. Ahead of the auto sales number, Bajaj Auto has contributed. trade, and L&T and Reliance are contributing. So all the heavyweights are contributing in today's trade. What is not doing well, very few stocks, the big one being Dr. Reddy's, and it is down on news, not on selling floor. It's mainly down because of the Suboxone launched, which got delayed. Tech Mahindra has been rather weak for the past few days. It's down almost 7 to 8% in the past few trading session. IndusInd Bank is weak in trade. Hero, ahead of the auto sales number, is looking weak, and this is the reason why the bank nifty is also down. HDFC Bank is not contributing. It's down almost 1%, pretty much closing at day's lows. The Bajaj twins are also not contributing in trade currently. So that's the setup. Overall, majority of the stocks are contributing, but it's an extremely strong start to the new series that we've seen, Navneet.
Well, that's right, Darshan, and some respite coming in for the broader markets, at least today, which have been reeling under pressure. So I'm just going to highlight few stocks. Colte Patil was quite active today, so that one saw gains of nearly 17 to 18%. And finally, actually, it's closed at upper circuit, gains of 20%. Good going for this one. The hotel stocks went up in the last hour of trade, so something like Oriental Hotel and also Royal Orchid, both of them saw a good amount of strength, 18% gains for Oriental. Royal Orchid also closing around the day high mark of gains of 10%. Container Corp, one of the F&O stocks, also did well. So this one also saw some buying momentum, 6.2% higher for this one. Petronet LNG was up and about in today's session, and the consumption theme that we've been talking about, we did see HUL ITC going up. So you had Imami from the mid caps side of the FMCG pack that saw gains of 5.5%. NMDC, Jindal Steel and Power Metals pack was up today. Nifty Metals Index was your top sectoral gainers, 4.5% for NMDC. JSPL also up at least 6 to 6.5%. Let me highlight a couple of losers then. Oracle Financial, that was quite weak in today's trade. That's the intraday chart, and throughout the session actually it's been trading in the weak territory, down 2%. Dilip Bilcon continues to be locked in lower circuit today. I think it was down for the 8th straight session. Gujarat Gas tumbled in last hour of trade, or last half an hour or something. Recovered from the day's low, but still closing with cuts of 4%. And Jain Irrigation, first day of the new series, once again saw fresh short positions coming in for this one with cuts of almost 3%, Darshan.
Yeah, so let's first pull up to see how the Nifty has closed. What are the contributors, what the Nifty has done through this year. First of all, the Nifty pretty much ended at the highest point of the day. So extremely strong close. It actually moved up gradually throughout the day. Indicating that there was no sudden sell-off that happened. Pull up the Nifty Bank, and there was this big blip that happened in the afternoon trade, and the Nifty Bank that corrected significantly, not closing at the highest point of the day. So the close for the Nifty Bank is not very strong in trade. Let's pull up the contributors, what happened with the Nifty, and we'll come to know exactly who contributed how much. The Nifty was up 125 points. Reliance, HDFC, L&T, ITC, the heavyweights have been contributing, but is not doing well is HDFC Bank. HDFC Bank has reversed the gain it had, so almost contributed 12 points on the lower side. Obviously, IndusInd Bank, M&M, Dr. Reddy's also not contributing. So let's see even if we can pull out some charts that indicate how we've panned for the first 6 months of the year, and we'll come to know what exactly has happened as far as the market is concerned. Now, if you're taking a look at what's happened on the Nifty itself, it's basically IT companies and some of the private sector banks that have done well. TCS is up when the Nifty itself is up 1.7% on the YTD basis. TCS is up 37%, Kotak is up 33%, Bajaj Finance is up 30%, Infosys, Tech Mahindra, HUL, all the high beta counters, all the high value stock have moved. And now we need to look at the counters which are low valued and not performing. You have your Tata Motors, HPCL, Vedanta, Bharat Petroleum, 30 to 40% down.
The oil and gas stocks, Darshan, have been under pressure because of rising higher crude prices. So clearly, I think the index have been maintained by select financials and also the ID pack. I think the picture is going to look the opposite if you could just pull up the Nifty 500 on YTD basis, because there was a huge correction that one has seen for the broader market indices for 2018 till now, where Nifty is still sitting with gains of 1.5%. There's been a sharp correction that one has seen for mid mid cap, small cap, or also the Nifty 500 index. So that's the one for you. Look at the losses first, and these are your all usual suspects. Vakrangi eroded wealth of nearly 85%, Bombay dying 80%, Quality, JBF Industries, Reliance Naval and Engineering, PC Jewelers, that's the other one which has been in focus for this year, and Jayaprakash Power, Hindustan Construction, all of them, and 1% Beverages also, not to forget that one, how shareholder wealth and all these stocks have been eroded. And on the gaining side, a couple of gainers. Merck was up 84%, so Indiabulls ventured it pretty well in the first half of this year. Firstsource Solutions, so here also, Darshan, if you see, these are all IT stocks, Firstsource, NIT, Mindtree, KPIT Technology. So I think the support emphasis has come in majorly.
L&D Infotech also on the IT side.
Yeah, so majorly it's the IT pack which has given support so far in the first half of this financial year. I want to pull up the turnover and let's see how that panned out, because participation usually on day one is on the lower side. So it is on the lower side, definitely. The cash turnover as compared to yesterday was 37, today it's 29,000, and NSE F&O, as expected, it's below the average turnover of nearly 5 to 5.5 lakh crore. Well, on that note, let's get going and get you some closing thoughts from our technical experts. Sarvendra, I'm going to come to you first. How would you approach trade on Monday morning?
Oh, I think today is a hectic day. Tomorrow is also a hectic day for us because we have monthly and quarterly closes to look at now. So we'll be looking at and going through our data, looking at the Bhav copy and getting a strategy set. Not only for Monday. We will be fixing out our strategy for the next month, one quarter, because how you have closed for the month and quarter on candlesticks gives you a flavor of what to expect into the next bar or two bars. So in that sense, I think the work begins today once the Bhav copy comes, and I think we will have a much clearer view next week. We are carrying a very clear view right now, and our view is on the downside. But to pick stocks and what trades to do, I think today's Bhav copy is very, very important. Both monthly and quarterly closes happening today. It should be very, very important. So next week I will have a better update.
Manav, what about you? What would your approach be, considering we've closed above the mark of 10,700, which is a day's high?
Yes, in fact, most importantly, the weekly close above 10,700 is going to be slightly positive. That is one thing that I started with, and last week's low was also 10,700. So we have successfully defended closing bases, 10,700. I think the kind of a sell-off that we observed in last couple of trading sessions and a complete pullback, or you can say a reverse positions, and closing up of 10,700, definitely some sort of a bear trap has taken place. In case of Nifty manages and exceeds the levels of 10,030 going Monday, I think that is the time to go long. And definitely if somebody goes long, a stop of 10,680 can be placed, and eventually you can expect a retest of the levels of 10,800. So I think on the broader sense, as long as Nifty holds on 10,680 on closing basis, I think one can still maintain a slight positive bias, but a stop loss is definitely recommended.
Okay, we leave it at that, gentlemen. Manav as well as Sarvendra, thank you so much for joining us on Bloomberg Quint. But as we round up, the goods and services tax was rolled out on 1st July 2017. A year on the opinion is largely divided. What also changed is the very structure under which the goods are transported across the country. The e-way bill, which was rolled out from the 1st of April this year, has prompted transporters to adopt to a new system. Payaswini Upadhyay did a ground check with 3 such transport operators based in Mumbai, and here's how their experience has been so far.
The government's GST Tech Twitter timeline is abuzz with e-way bill statistics. As of June 23rd, more than 10 crore e-way bills have been generated, with Maharashtra, Gujarat, Tamil Nadu and Haryana leading the way. But numbers hardly give the full picture. The first missing piece, the error versus evasion problem, as Abhishek Gupta, Managing Director of Prakash Parcel Services, puts it.
On the ground, there are still a lot of teething. I wouldn't call it teething now because it's 2.5 months, but there are some issues which are not getting addressed for reasons which are probably known to the department. They aren't able to address them well or find a solution. And one of the major ones is the errors that happened, while preparing e-way bills, which is something which is not getting addressed well. And they're not able to take that point and correct it. for which vehicles get detained on the way. Errors are found in the e-way bill, though there's no evasion that's happening, but there's still an error component for which there are penalties levied, vehicles get delayed, and then there are all sorts of, legal issues that sort of start off.
Okay, so what sort of errors are you referring to? Because if I understand it correctly, the moment from the point of the starting of the goods is where this e-way bill gets generated. Are there details that you as a transporter have to fill, perhaps where the errors are cropping up?
Yeah, so basically the transporter is supposed to fill the part B of the e-way bill, which basically is the vehicle number and any subsequent change of vehicle numbers in transit due to transshipments or any changeover of the vehicle. So that's a process which transporters need to do, and that's an area where the transporters aren't very competent because they haven't worked in this online environment. So that's where the errors happen. Work happens a lot of times in the middle of the night. Trucks get transshipped at say 11, 12 o'clock in the night. You don't find a cyber cafe to go to, or if you're at the port, where do you go and change the vehicle number? So all those things are something which people are trying to cope with, and then there are possibilities of errors which happen, and then on the highways the vehicle gets detained, considering it as an evasion, which is actually not an evasion.
Okay, give me a flavor of what sort of errors you're talking about and what sort of questions get asked from the department.
So basically the vehicle number being entered wrong is one of the major issues. A human error is what I'm talking about. Human error is happening, and then the department person, when he stops the vehicle, he doubts whether this material is genuinely sold and this is the right number of the vehicle. They don't believe in errors. As per them, it should be the same number as per the vehicle on the road. So that's an area which is concern, and it's not been able to get addressed yet.
The transport industry works with several middlemen: truck driver, truck owner, broker and the transport company. Gupta said that this can complicate things. Let's say transporter X loads a truck with number 1234 and gives it the e-way bill and invoice. The truck broker decides to get more material from transporter Y at the same loading point and clubs both sets of materials in a bigger vehicle, let's call it truck 2, to increase his revenue. In case the truck 2 broker doesn't inform the transporters X and Y that their material is clubbed in one consignment, the e-way bill will not be updated. If it is not updated, the vehicle can be intercepted. Trucks carrying goods meant to be unloaded at different destinations has also become problematic. For instance, transporter X receives material in Bhiwandi for Guwahati with the e-way bill and invoice. X sends the material from Bhiwandi up to Nagpur warehouse with material meant for Nagpur. From Nagpur, the material is sent in another truck with other material up to Jamshedpur. From Jamshedpur, it is sent to Kolkata and from there to Guwahati. If in any of these transshipments, the vehicle number is not updated for any one consignment, the entire vehicle can be detained.
How do you expect the department should address it? Because if the goods that are getting transported in a certain vehicle and the vehicle number is not matching what's written on that form that you're saying, what should the department do in the middle of the road to ensure that it's not evasion and it's a genuine human error that has happened?
So one solution that our association has given the department is that rely on the transporter's document. So the transporter maintains a unique document as well. So you can hold the transporter responsible and verify with him that how many times has he moved this consignment. If his
but
document
the idea
is
is to maintain the idea is to maintain all this information in a centralized way. What you are suggesting is outside of that system?
It can be done in the system.
Okay.
So they can have the provision very much in the system to map the transporter's document number, have it serially controlled so that there is no duplicacy of that number.
Since the onus of updating the vehicle number is on the transporters, the liability of penalty in case of any error falls on them as well. Jitendra Parekh of Special Chem Carriers explained the second piece of the e-way bills picture.
See, in e-way bill, there are two parts. One is part A and the other is part B. Part A, party will fulfill the part A, and in case of part B, it's a transporter's responsibility to check at least. In full truckload, there are no issues. Party will fill part B, they will put our vehicle number and everything. But in case of parcel booking and changeover, like
where there are several companies' goods that you are carrying.
Yeah, we are carrying. So during that, we have to update Part B. That's very big, you can say, it's our responsibility. And if we have some mistake, we are doing some mistake, then penalty is very high. So it's
and you
we have to be very careful about
bear that penalty now?
Yes. As a transporter, if it is my mistake, then I have to bear that penalty.
Okay, which earlier wasn't the case?
No, never.
What used to happen where, let's say, part of your consignment came from X and the other part from Y? How was the liability getting shared earlier?
Previously, it was like I will give you the example of Gujarat. Before GST came, e-way bill and GST came, there was some sales tax forms of each and every state. Normally, that form has to fill up by party, and they will give us, and we have to just carry that form to the border. They will check it, and we have to go. In that case, we were not liable for anything.
The pre-GST era of interstate movement of goods was marred by delays and validation of documents at state borders, with companies, transporters and truck drivers speaking of rampant corruption in hushed tones. E-way bills had promised to change this. Vijay Rawal, president of Bombay Goods Transport Association, said things have turned from bad to worse.
जिनको चेक करना है उनको भी नहीं पता पूरा कि क्या चेक करना है. मतलब हो क्या रहा है कि this cannot be stopped because जिन लोगों ने चेकिंग करनी है और जो चेक करवाने वाले हैं उसमें काफ़ी कम्युनिकेशन गैप है.
Okay.
For instance, like truck going from here to Delhi and e-way bill inspector says कि भाई ये उसने जो ड्राइवर है उसको तो e-way bill का कुछ ABCD भी नहीं पता. उसने उनको दिया ई-वे बिल कि भाई ये है और उस ई-वे बिल में कुछ गलती है, कुछ भी भले ही पार्ट ए में है या पार्ट बी में है, तो वो कहाँ कॉन्टैक्ट करेगा?
ओके.
देन द सिस्टम ऑफ चेकिंग, पहले तो क्या था कि बैरियर था, बैरियर पे एजेंट थे, वो कुछ होता था तो वहाँ से आदमी फ़ोन करता था. अब वो डॉक्यूमेंट उसके पास में है और आपको पकड़ा गया है, रात को तो ऑफिस खुला नहीं होता, देन वो नियरेस्ट वहाँ से फ़ोन करेगा. इसके कुछ आवर्स हैं इन्होंने फिक्स किए होंगे, इस आवर के अंदर इनको क्लियर करना है. तो अभी तक तो ऐसा कुछ, जो मैं आपको पहले भी बोल रहा हूँ कि ऐसा कोई क्लैरिफिकेशन ही नहीं आया है कि हाउ द चेकिंग सिस्टम विल बी देयर.
सो एवरी स्टेट इज फॉलोइंग इट्स ओन चेकिंग सिस्टम.
एंड है क्या कि जो लोगों ने चेकिंग करनी है, मेरे हिसाब से तो दे आर नॉट दी पीपल वो क्या है, पुराने सेल टैक्स वाले हैं या एक्साइज वाले हैं, और उनके तो दिमाग में जो है ट्रांसपोर्टर की इमेज वो है ही है, वो तो सबको एक ही निगाह से देखते हैं.